Welcome to Fiscal Voyage. I'm Felix, and in this video I have a 5 minutes analysis of General Mills to see if it's either a buy, hold, or sell. Coming right up.
Alright, so here's the 5-minute review of General Mills Inc. Could be found on New York Stock Exchange as GIS. General Mills is an American multinational manufacturer and marketer of branded consumer foods sold through retail stores. General Mills itself was created in 1928, and some of the brands you probably heard of in the cereal aisle: Cheerios, Chex, Cinnamon Toast Crunch, my favorite, Cocoa Puffs, Fiber One, and a whole bunch more. They also have products of grain snacks, baking goods, and organic foods. In the fundamental sections, you can see here that revenue grew at a compound rate of 1.51, and net income grew at a rate of 2.78. So it's decent. The company has been around for a long time, and the growth is slowing down. They have been purchasing share count been decreasing since 2012, and they are currently have an S&P credit rating of BBB, which is good for this size company. In 2017, they had earnings of $2.77. The dividend yield currently is at 4.37. Actually, their 5-year dividend average is 3.08. So this is pretty good here. Almost over 100 base point dividend yield you get now. They currently have a payout ratio of 52.14, so there's plenty of room for the dividend to grow. However, the 5-year dividend growth rate is at 8.8%, and the most recent increase was 2.08. So the last couple of years they've been lowering their dividend increases, but we'll talk more about that soon. Net margin actually grew this year at 13.96%. Here we have a future outlook. As you can see here, 2018 is predicted to have earnings of $3.08. Remember, in 2017 they had earnings of $2.77, so it is going higher. Same thing as 2019 at $3.30. CFRA is projecting a 3-year 7% earnings growth. You can see here the forward PE is at 14.9 versus the 5-year PE average of 21. So that's some good sign here. Next, we see the current fast graph of General Mills. You can see here the black line, which is the price. It's meeting the orange line, the earnings. Just based on this graph, it looks great. Buy. We'll see exactly where the price is and current price and based on fair value. So in this section, the fair value price section, we can see that CFRA has the fair value of $45, Simply Wally at 62, Fast Graphs that we just saw 54, and my DDM analysis at 42. This gives a fair price of $50.96. Currently, you get General Mills at $44.58. So basically, this means that General Mills is undervalued by a whopping 14.31%. With that, my recommendation would be a buy. However, there's some things to consider. I personally do plan on buying General Mills in the near future, most likely the end of this month or the beginning of next month, once I have some capital. One thing to consider with this company is the slow dividend growth rate. I think they're gonna bring it back up to more around the 5 to 6% going forward. But I do like the low payout ratio, the high dividend yield at 4.4%, the low dividend payout ratio. Future earnings are projected to be higher. Like I mentioned, 7% for the next 3 years. And this is a company that's not gonna go anywhere in the next 5 years, 10 years, people are still going to eat cereals. People love cereals. I love cereals. Um, so to me right now, this is a great opportunity to get some shares of General Mills, which I personally plan on buying either at the end of this month or the beginning of next month. So if you agree with my analysis or don't, please leave a comment below explaining why. Don't forget to like and subscribe and hit the notification bell to be notified of my next stock analysis video. Thank you for watching, and make sure to visit my site fiscalvoice.com. Thank you guys, and have a great day.